Good morning, folks. I am starting off this recording on a 30 minutes time frame based on the last thing I spoke about, which was finding directional bias. And even though price action hasn't been the clearest in the past couple weeks for me specifically, I have been able to identify certain PDRAs that we are most likely going to reach a bit sooner than the rest. So starting off with Wednesday's price action, we have this CB on a 30 minutes chart. We also have this inefficiency, this sell side inefficiency sitting over here on a 30 minutes chart. I was paying attention to them during the Asia session because I believed, based on other analysis, that we were reaching for sell side liquidity, and I thought and assumed to myself that we may not be able to sweep Asia high again because we respected this order block during the New York PM session. Of course, this is all on the Euro USD. So I watched to see how price may react at these levels, and we rallied up into the first sell side imbalance, this fair value gap, and also to the top one. At this point, I removed this lower one because it's basically been mitigated, it's basically been used, and we tapped into this one. And I was really tempted to take this entry, even though we had not gotten the confirmation yet, because it aligns with this previous BC, making it a breakaway gap in my mind, of course. Immediately we got to that point, I took in positions, I entered the trade, and we speedily rejected off of those areas and took out the sell side from New York AM session. Technically lunchtime, but it's New York AM session from the previous day. From the previous sessions. So the same setup also applies even on the day before this. On the same as London happened here during New York, we respected higher time frame PDRAs, went into the order block once more, reaching for lower prices. So overall, the bias for last week was bearish, and I will cover my bias for this week on a separate video. And I wanted to run down quickly with what I saw and how I started anticipating price. This was essentially what I traded on Euro USD. I did not trade on NFP Friday. I did trade this, took it to sell side, and got stopped out eventually. This was just me putting on a demo trade to see how it would have played out, and it did play out accordingly, because this was a market structure shift to the upside, and this was an order block and a fair value gap on a lower time frame to take price up. Of course, it took a little bit of time, but we eventually got there. And yeah, it was just the typical 2022 model. Sell side liquidity was swept at this point. We got a displacement that gave us a market structure shift, a fair value gap for an entry, and then a rally to the upside. Of course, NFP came out on Friday, and we continued to the upside. Going down to the 5 minutes chart for refinements of that tape reading session that I had, which I did not trade once more, just have to repeat that because of the NFP. So again, sell side liquidity was swept at this point. Turtle soup entry for turtle soup traders, and displacement to the upside, giving us a market structure shift at this level. We got a big buy side imbalance, which you can see the bodies of these candles were all within the buy side imbalance were all within the fair value gap. Of course, later on we dipped lower to this lower fair value gap. From this candle high to this candle low, we later dipped into it, which was permissible because I did not want to see price come below this red candlestick, this down close candle. Of course, the stop loss was here at that time, at the sell side liquidity that was already swept, right? There was no reason for price to return there. Then eventually, as we headed into New York session, we tagged the previous highs. I was targeting the previous London high at the time, but the stop loss is a little bit higher than that, and it got stopped out at that point. So this is basically the tape reading that I did for these sessions on Wednesday and Thursday. Thursday I didn't really trade Euro USD, but just wanted to include this in the video. Moving on to S&P 500. I am very happy with the outcome of this trade, even though it was a losing trade. Let me explain why. So we had the London session and the Asia session up there. We traded a little bit below it and swept sell side from London. So at this point we swept sell side liquidity, right? I'm on a 5 minutes chart. I would be looking for a displacement to the upside that causes a market structure shift. And at that point in my mind, we've created the purge to the upside, because we had taken out all these down close candles, and we retraced back to the 730 true opening price, which is at that point, which is this gray line that you see here. So we swept it going up, and my mind again was looking for fair value gaps or other blocks for my entry. We got a fair value gap right there, but I was so much more interested in the other block because of how small the fair value gap was. So I watched price to see if we would retrace there, and I set a pending order with a stop loss obviously being at the low, and the target being the closest swing high, or 5 handles or 10 handles, and then the terminus for me would be London session high in this case. So price came back, pulled back to it, I entered the trade, and we created a new low. So I say this because even though my stop loss was hit, the trade idea was everything was valid with time and price. The time was 10:30, well 10:20, when we pulled back into this other block, and we did retrace for a little bit of profit. At this point I was actually sitting in profit, and it was the silver bullet hour. We already swept London's low, we got the displacement we needed, and up to this point my mind told me that everything about this trade was valid, and it was. So the mistake I made after this, which was a lesson to me, was switching buyers immediately. There was no point in doing that. I could have just waited for the next session, which was going to be the next day or something like that for me. So I switched buyers because we swept a new low. I told myself that we may be able to reach the higher time frame target, which again I'm not going to cover in this video. I'll point it out in the next. I assumed that we may use this other block for lower prices. This last up close candle before the rally below, I decided to flip my trade and enter the sell position here, and I actually also went into profit by about $400 or so because we dipped down from it, and stop loss being at the high of this candle. Then eventually we tagged that as also, and we didn't only tag that, but we actually made a new high and eventually cleared London session high. So my bias initially was valid, but we just had to create a new, we just had to run the sell side once more before rallying up, and we used this other block here to propel higher. So I guess I am not really disappointed or sad about this trade being a losing trade, because everything was valid and we just had a higher draw in liquidity, which was sell side liquidity before pushing higher. So that was all, and hop into my MetaTrader to show the P&L and executions. We can see over there are the trades that I took from Euro. Took it at the fair value gap, we dipped below, and all these blue arrows pointing up at the partials and getting stopped out eventually with my stop loss in profit. And yeah, that was the last trade I took. I did not trade, as you can see, going into NFP, and then bringing up SPX 500. Let's see if I can scroll. There are the trades that I took. Of course, the spreads always execute me at weird points, but I took the execution when we were at this order block. We made a new low, got stopped out at the stop loss here, and re-entered a sell, got stopped out here, and that's how we got multiple stop losses. I'm not sure why there's a trade there, but I actually do not recall this trade, this execution, but maybe it was I think it was a PM session execution within this CB, and my stop loss placement was ridiculous because such a trade should have a stop loss above this high and not these highs, but it's fine. I have made a few other mistakes which I will cover when checking my P&L or my transaction or my history, which we can see from the last time I updated the videos on the YouTube channel was here on the 2nd of August with SPX 500 taking a $670 loss. The following day with the Euro trades that I took, which are these two, with a 2.5 lot size and 14 lot size, we can see they got stopped out by the fact that it's highlighted in red. They got stopped out, but they both got stopped out in profit. This one at $92, with this one at $1,600. The NZD, Swiss, and GBP USD were somewhat accidental trades, somewhat tape reading, but not calculating or taking into consideration most critical levels that I would have normally, and that's how they basically negated each other with minus 67 and plus 54. The ones that I took as losses are these ones, the 1, 2, 3, 4 with 21, 7, 14 and 7 lot size respectively with on SPX 500. As you just saw now, I took an initial loss of 1,500 followed by 670, then a $1,300 loss. Oh yeah, now so I understand why this trade was still here. So this was a pending order set during the Asia session before that New York AM, and I was ideally looking for price to retrace back to that level before falling off, which it did, but my stop loss placement was not the best, and I had already jumped the gun and forgot to delete this pending order. Yeah, I was looking at that level from the AM sessions and the London and the Asia as a high time frame drawing liquidity. So all in all, so far I am down by $5,089, which was why a second reason why I stopped trading before NFP, because I had almost reached my weekly maximum drawdown, which was 6,000, and I didn't want to reach that to stop, so I stopped at this point. That should be all for now. On the next video I will highlight draw in liquidity, and this is probably the last time you see my charts looking like this, and I'll clear everything up for the week ahead. Stay safe and good trading.